What's going on, traders? This is Jack with the Trading Tribe, and welcome back again on the channel for another trade recap or trade tip. We'll kind of do both combined today. I wanted to go through really how you can scale out of trades once you get to the point where you're trading with multiple contracts in the futures market or multiple contracts in the options world. It actually applies to stocks as well, right? With multiple shares, you can scale in and out of really all markets. So kind of wanted to have a video deep diving on how I typically do it with a live example. I'm still in on a natural gas swing trade that I took overnight. I have 2 contracts left, up about $540. And then if I bring in my profit from the day, this is a overnight trade, so this is a little bit off, but just today I'm up $1.2 thousand on it so far. So we'll see kind of how it goes, but started with 3 contracts, scaled out of 1 up at this key level. I'll bring in my trades as well. See if those can load in here, and we can kind of go through how I've attacked it. So we'll see. I entered in on natural gas when we did pull back yesterday after this higher high on the hourly. So I'm typically a trend trader, and I like to wait for these pullbacks in a trend to actually enter. So in terms of scaling in, I'll typically do kind of a feeler position initially where I think risk to reward makes sense. And then essentially when the trend actually confirms, you'll notice gas actually did begin to kind of trend up, which was the goal here on this trade, right? I bought 1 contract down here. What I ended up doing was adding. I had a little fantasy buy stop where I could add, and then I added again this morning on the first initial dip on the 1 minute. So hopefully this makes sense, right? In terms of getting in and scaling in. Typically, I recommend scaling in as your trade is beginning to work. This is kind of an art, right? Because we do have to be careful with our entries and our cost basis, which is kind of the average price of your whole position. So obviously I'm buying at great spots, right? I'm buying before the turn and at lows and on an uptrend, right? We want to keep our buys as low as we can typically. And so a lot better than buying up in these pops, for example, right? That would make a pretty significant difference in how much money you can make in this case. So just kind of a pro tip there on the entry side and kind of how I do it on the entry side. And then in this case, right, if we notice, the trade really almost is to target. So had kind of an initial target at the highs we've reached this week. And then obviously best case scenario kind of at the total peak here from yesterday's highs are where ideally, right, I can get out of the trade fully. But we have to be understanding, right, that we're in a really big supply zone for now, right? Every time we come up here to this little zone of levels, we reject. So we've rejected here, here, didn't even get there earlier this week, but rejected here, here, and then so far, right, we're rejecting again on the 1 minute. And so typically what I'll end up doing is once the trade gets to those initial kind of targets or key levels, I'll begin to kind of scale out. So you'll notice out of these 3 contracts, I've already gotten out of 1 at that key level rejection. So we want to make sure we're taking profits typically along the way. A lot of beginners in the markets will kind of get in a trade. The trade will go 99% to target or 90% to target, and then it'll turn around on you and go to your stop loss or go to break even. And that can be pretty frustrating. So what I like to typically do, especially if I'm trading with multiple contracts, is I like to scale out as we get closer and closer to target. And this is a perfect example as to why, right? Because I've already locked in $500. And then essentially, if my other 2 contracts do get stopped, we can open up this ladder. It's essentially break even right? So I'm tightening my stop loss along the way as well. So if gas doesn't make a higher high on the hourly and it turns around today, it's all good, right? I'm only going to lose $20 and I already locked in 500. So think of it as like worst case scenario because of scaling out, I'm going to make $480. Best case scenario, right? If we open up the ladder, I'm going to make another $1,000 in this example, right? Based on kind of where my target is. So hopefully this makes sense, right? How to scale in and scale out of trades. This is applicable really in all markets. So if you have questions, feel free to leave them down below. This is a really, really important component, at least in my trading. So really hope this helps. If you found value in the video today, feel free to like and subscribe to the channel, please, for a lot more content coming. Definitely want to show you more of my pro tips and tricks. So if you like it, just let me know down below. And with that, we'll see you next time. Thanks, everyone.